Hey everybody, Jeremy Goodrich, owner of Shine Insurance. Welcome to the Business Insurance 101 series. This series has one single goal: to help you understand how business insurance works in a much more clear way than you obviously do right now, or you wouldn't be here watching, right? We've got a series of videos. I'm going to go through things as smoothly, as clearly as I can. And I want to tell you something from the very beginning. I work specifically with commercial real estate investors. That is the type of businesses that I insure the most. Now, if that is not you, it doesn't mean you shouldn't watch this, because it applies across the board. But I'm going to use language around commercial real estate, and the reason for that is that's simply what I'm doing the most. So this video is the first video in the series. I'm going to go over really everything. By the end of this video, you'll have a sense of the main types of insurance that you may need for your business and what those are. So let's dig into it right now. So what we'll cover, we'll talk about 4 important terms that we need to understand to be able to get into this. Types of insurance that we could get for our business. And finally, I'll break down for you the portfolio overview, a document we use with all of our clients that breaks down what insurance they do have, what insurance they don't have, and what they might want to consider to cover their business. Let's start with the 4 important terms. These terms apply across the board, and just understanding these 4 terms is going to help you when it comes to talking with your advisors about insurance. So the first one is coverages. The second one, exclusions. The third is limits. And the fourth is deductibles. Well, let's dig into it. All right. What is a coverage? This is what insurance is based on. It's coverage for a specific, so there are specific bad things that trigger insurance policy to respond. So if a coverage like building coverage, this is a coverage for the building itself. Coverage for if bad things happen to the building, we're going to pay to rebuild the building. That makes sense, right? One of the most common types of insurance, coverage. And that's what that means. Coverage for specific bad things that trigger insurance policy to respond. Well, what are exclusions? These are specific bad things that would not trigger the insurance policy to respond. A very common one is flood, natural rising of water. This is an exclusion on most business insurance property policies. You have to get a flood insurance policy separately to have that, because it is an exclusion on your primary policy. So you have coverage, things that are covered; exclusions, things that are not covered. Limits is another key term for this process, right? So it's the highest amount of money the insurance company would pay out in a claim. So if the building limit, that's a coverage we just talked about, is $1 million for a given building, then no matter how much it's actually going to cost to rebuild that building, it could cost $1.7 million to truly rebuild it when something bad happened. The most the insurance company is going to pay, the limit, is $1 million. They would not pay more than that limit. So when you see limits on your insurance policy, that is the ceiling of what the insurance company would pay out. And finally, a deductible. This is the amount of money you agree to pay out of your own pocket before the insurance company starts paying. Common deductibles on your personal auto policy is like $500. So if your car gets smashed, you're going to cover the first $500. The insurance company is going to cover the rest. On your homeowner's policy, it's pretty common for $1,000 deductible. When we get into business policies, a lot of times business insurance is more expensive, so we're looking for ways to save money, and one great way to save money is to increase your deductible. My commercial real estate clients, most of them keep at least a $5,000 deductible. There are some of the biggest property owners have a $100,000 deductible. They agree to pay the first $100,000 before the insurance policy even comes into play. But that brings their insurance price way down, because the insurance company knows they're not going to be involved in small situations. They're only going to be involved in big ones. That's not very common. That's really the biggest investors. Most folks that I see have a $5,000 deductible, a $10,000 deductible if they have a lot of properties. Again, if you're in other kind of business, it depends on the cost of the insurance. If a $1,000 deductible makes sense because it's not that much more expensive than a $5,000 deductible, great. That's a conversation to have with your insurance advisor. So those are the 4 key terms: coverages, exclusions, limits, and deductibles that we get started on. See, you already have a much clearer understanding of how insurance works. Pat yourself on the back. We're definitely headed in the right direction. Now let's talk about the types of insurance you can purchase for your business: property coverage, liability coverage, workers' compensation coverage, commercial auto coverage, umbrella coverage, and then other things. There are a lot of things that are coverages that I won't be able to cover every single one, although I will dig deeper into all of them in the separate videos that I have for each of these types of insurance. But again, there's lots of things. It's really important to talk with your insurance advisor and really be connected with them in that way. So let's talk first about property coverage. I mentioned it earlier already. This is coverage for physical belongings. This is your stuff. Most simply put, property coverage is coverage for your stuff, right? So this could be a building that you own. This could be improvements that you've done to someone else's building. If you're a bakery and you've improved a building, you don't own the building, but you've improved the building in some way, or you're a dental office and you've improved the building in some way. Those are tenants' improvements. Business personal property. If you imagine the building, if you pick up a building, turn it upside down and shake it, what falls out? That's called business personal property, the stuff inside. We want to make sure we have coverage for the stuff inside if we own it. In the case of a commercial real estate investor, most of the times they have tenants and the tenants own their stuff. So in that case, you wouldn't need very much business personal property coverage, but it certainly is a coverage to consider. Another one is loss of income coverage. Loss of income coverage is coverage for lost income because of a covered loss. So your building burns down. You can't make money off of the business that was in that building until it's rebuilt. Your insurance policy could actually replace that lost income from not being able to do business there as a part of the claim. Really helpful, keeps businesses afloat. We had one recently, a restaurant that we insured where they had to be closed for 2 months because of water damage that came from an apartment above them. Well, they lost all their income. They had employees who were expecting pay. They had all sorts of things associated. The lost income coverage on their policy helped them to address that situation. Liability coverage. This is coverage for bad things that happen to other people because of your business, right? So this could be someone trips and falls out in front of your business. Someone gets injured inside your business. You give someone advice and they use that advice and something goes bad. There are lots of types of insurance coverage that is for bad things that happen to other people because of you or your business, and that is called liability coverage. If someone can hire a lawyer and sue you for something, that is probably a liability situation. They are saying you are liable for the bad thing that happened to me. Now, they may be right, they may be wrong. You're going to have to defend yourself either way, and so this is where liability comes into place. Workers' compensation coverage. Coverage for injuries to your employees while on the job. When someone is working for you, if they get injured, it's different. This is a very state-based coverage, so I should say that from the beginning. But if someone is injured at your business, in most states, it is considered your responsibility to address the cost of those injuries. Now, if someone is seriously injured, that could be really, really big number. And so you want to make sure that you have workers' compensation coverage so that you aren't paying out of pocket hundreds of thousands of dollars for someone's injury while they were working for you. Commercial auto coverage. Coverage for automobile accidents associated with cars connected to your business. Now, the most common one is a car your business actually owned. If you own a fleet of trucks because you're an electrician, then you need some serious commercial auto coverage, right? Your business owns a fleet of trucks that needs to be protected. Even if you don't own vehicles, there's something called hired or non-owned auto coverage that could play in. So there's lots of different types of commercial auto coverage that you have to consider as a business owner. Finally, maybe the most confusing one is a commercial umbrella. So I already talked about liability coverage. This is coverage for bad things that happen to other people because of you or your business, right? Commercial umbrella is simply extra liability coverage. So let's say your main liability policy has $1 million of coverage, but you really don't think that's enough. You want $10 million of coverage because maybe your business has an asset that's a $9 million asset, and you say, well, someone could sue me for all the assets in this business name. I believe that would be about $10 million. I want to make sure I protect the assets owned by this entity, which is a great rule of thumb, by the way. You only have $1,000 of coverage on your general liability policy. Well, how do you increase it? The way that insurance companies have built into their policies to increase liability coverage is called an umbrella. It adds additional liability coverage. It also expands some of the definitions, but that's the 300 level. We're just doing 101 right now. So all you need to know about an umbrella right now is that it increases the liability coverage, adds extra liability coverage on top. Oh, I hadn't even gone to this. Additional and expanded liability coverage above the limits of your general liability policy. There, I said it. Now you've seen it. You've learned it in two ways, even though it got cut off on the screen. But that is okay. And finally, some miscellaneous coverages. This is a great place to say, I am simplifying insurance. Purposefully simplifying insurance, because I feel like one of the things that's so frustrating about insurance is that insurance agents and advisors just go straight to the complicated stuff and never give you a grounding and a foundation to grow from. Having said that, there is a bunch of complicated stuff. And so that sort of gets into the miscellaneous coverage. So I don't want to just totally glance over that. So there are other coverage options that don't fit into those main categories. Coverage for tools and equipment, coverage for ordinances and laws. If your building burns down and suddenly now you have to rebuild it at a higher level than you did before, but not just because you want to, because city code makes you. There's some coverage for that increased amount of value that you're going to have to put into a given property. Coverage for terrorism. After 9/11, because there was no coverage in the Twin Towers as a part of that entire insurance claim, because there were all these insurance claims, we created terrorism coverage in a way that it hadn't been created before. That exists now. Flood coverage, I talked about that earlier. Coverage for natural rising water, earthquake, oftentimes not included in a regular insurance policy. You have to add it. Mine subsidence, such a weird one. If your building sits on top of an abandoned mine underground, and that mine shifts somehow, collapses or something, and causes damage to your building, that likely is not covered unless you have mine subsidence coverage. A water backup of drains, equipment breakdown, cyber liability and data breach, directors and officers of a nonprofit or a profit business. What if you make a decision as a director on a board and it backfires and bad things happen and someone files a lawsuit, right? Key person life insurance. What if the main person of a business passes away? Is that business going to be able to make it? Maybe if we had a life insurance policy for $1 million, so we had $1 million there to help us bridge the gap between that main person and the next person who's going to make the business work, it would happen. Newly acquired properties. As you can see, it goes on and on. I wanted to give you a taste of the idea that there are many other coverages there, but I don't want you to worry too much about that. I don't want you to feel overwhelmed by the amount of additional things there are. This is a 101 video. Your intention is to understand insurance at a basic level. So know that there are some miscellaneous other things, okay? And then focus on the things that we're learning as the core pieces of your coverage. I think that's the best way to do this. So I want to talk lastly about our portfolio overview, a portfolio overview that you can download by going to the notes of this video and using yourself if you want to organize your insurance. So we do this with all of our clients. We use a portfolio overview to help to organize their actual insurance policies. Yes, we send them their actual policies, but oftentimes your policy is fairly confusing, right? And so this is just an overview document that's meant to be a support document for that. And I wanted to show you that really quickly. So there it is. Basically, we talk about the property details. We lay them out in detail. We lay out each different page. There was business information, there's property coverage, there's liability coverage, all these things we've talked about, right? Workers' comp coverage, commercial auto coverage, broken out: commercial umbrella coverage, getting into the details. The 300 level, there was all the miscellaneous coverages, the final package premium. There it is, laid out by price so we can really see what we're talking about. Our portfolio overview lays out the 300 level, probably is the best way to say it, of the insurance policy that you are working with. So why would you want to work with Shine? Just as a last piece, well, I think that we really do things differently than a lot of insurance advisors. For one, we're very good at explaining things clearly. I hope you've experienced that in this video here. But also, we are very much a team that you connect with throughout the process. So often, there are salespeople, and then once you're in, they're gone, and you're just dealing with a service center or an 800 number, and you're on hold all the time. That is not how Shine works. You will work with our core team throughout the entire process. So that is the portfolio overview. What did we cover in this video? Well, we talked about the portfolio overview just then. We talked about types of insurance, the basic types of insurance, and we talked about 4 important terms: coverages, exclusions, limits, and deductibles. All right, that was it. So if you'd like to connect with Shine Insurance, we would love to have that conversation. You can find us at shineinsurance.com. Our motto or our mission is to change the way you feel about insurance. We do that by making smart insurance simple. It's been awesome talking with you about this. I look forward to seeing you in the next video where we dig into property insurance. We go deeper into property insurance and talk about how that works. We will see you right over there.